Rivian has surprised many investors and analysts with its latest report, so what exactly does the situation look like, and is the stock a buy? Keep watching for the next 10 minutes as we go through the entire report, but before we do that, subscribe to our channel $1 World for regular RIVN stock updates. Rivian Automotive, or RIVN, is positioning itself as a formidable contender in the electric vehicle market, aiming to challenge established giants like Tesla, Ford, and General Motors with its adventure-themed EV lineup. The company made waves on October 2nd when it reported third-quarter vehicle deliveries that exceeded Wall Street's expectations. In the third quarter, Rivian accomplished the production of 16,304 vehicles and successfully delivered 15,564 units, marking a significant milestone in its growth trajectory. Rivian, headquartered in California, has set an ambitious goal to achieve an annual production rate of 52,000 vehicles by the year 2023. Prior to Rivian's delivery report in early October, Evercore ISI had upgraded the rating of RIVN stock to outperform, suggesting that it has the potential to stand shoulder to shoulder with industry giants like Tesla and BYD or BYDDF in the EV sector. Notably, Tesla and BYD also recently disclosed their Q3 production and delivery figures. On the other hand, Wedbush analyst Dan Ives, a prominent supporter of Tesla, noted on October 2nd that Tesla is entering a new phase of growth, with the commencement of Cybertruck production anticipated around Halloween. Rivian's journey since its initial public offering 2 years ago has been akin to a roller coaster ride, marked by fluctuations in market conditions and operational hiccups. The automotive industry, as a whole, has been grappling with supply chain disruptions, and Rivian has encountered its share of difficulties, including product recalls and reversals of price increases. Achieving profitability may remain a challenge for Rivian as it continues to scale up its production. However, there are silver linings. In the second quarter, the company reported better-than-expected results, with an adjusted loss of $1.08 per share, while its revenue nearly tripled to $1.12 billion. Ives, in his assessment on August 8th, expressed optimism about Rivian's future prospects, stating that demand appears robust and visibility into 2024 is improving. He envisions Rivian as a significant player in the EV industry for the next decade. Rivian's journey towards profitability has garnered attention from analysts and investors alike. On September 12th, UBS initiated coverage of Rivian stock with a neutral rating at a price target of $26. According to UBS, Rivian is expected to achieve a positive gross margin in 2024, but significant increases in production volumes are not anticipated until later in this decade. To support its future growth, Rivian may need to raise additional capital, as indicated by UBS. In July, Rivian surpassed expectations in its second quarter delivery report by delivering 12,640 vehicles, exceeding Wall Street's estimate of 11,000 deliveries. Rivian also raised its full-year production guidance to 52,000 vehicles, nearly double the production of the previous year. The company manufactures its vehicles in Normal, Illinois, with a plant capacity of 150,000 units annually. Rivian currently offers a range of electric vehicles, including pickup trucks, SUVs, and commercial vans. In the first half of 2023, the company produced 23,387 vehicles, while in all of 2022, it manufactured 24,337 vehicles and delivered 20,332 units, slightly falling short of its production target. The semiconductor chip shortage and significant cost increases in key metals like lithium, nickel, aluminum, and cobalt have posed challenges to Rivian's production ramp-up, according to company management. In its Q2 2023 release, Rivian emphasized that increasing production is crucial to its path to profitability. The company also noted that it anticipates achieving its first gross profit in 2024. However, for fiscal 2023, Rivian expects adjusted earnings before interest, taxes, depreciation, and amortization, EBITDA, to show a loss of $4.2 billion. Rivian has adjusted its capital expenditures forecast to $1.7 billion for 2023, down from its previous guidance of $2 billion, with some planned expenses pushed into the following year. A significant development came on June 20th when Rivian announced a deal to use Tesla's supercharging stations starting in 2024, following similar agreements made by Ford, General Motors, and other automakers. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's talk about Rivian stock. On October 4th, 2023, Rivian Automotive Inc., or RIVN, experienced a decline in its stock price, closing at $21.69 per share, reflecting an 8.33% drop from the previous day's closing. The company currently holds a market capitalization of $22.44 billion, with a substantial trading volume of 47.87 million shares. The day's trading saw a high of $23.42 and a low of $21.56. Over the past 52 weeks, Rivian stock has ranged from a high of $37.39 to a low of $11.68. The stock opened at $23.18 and closed at $21.69 on this particular day. Notably, the average analyst price target for Rivian stock stands at $28.20, indicating a potential upside of 24.01% from the current price. While analysts express optimism about Rivian's prospects, they also emphasize that the company is in the early stages of growth and faces several challenges. Rivian is undoubtedly a promising player in the electric vehicle market, but potential investors should carefully assess their risk tolerance and investment objectives before considering investments in Rivian stock. Rivian stock has seen its fair share of fluctuations and challenges in recent times. On August 9, 2023, the company's shares took a 9.9% hit following its second quarter earnings report. However, it's important to note that as of early October, Rivian stock has managed to maintain an overall positive trajectory for the year, with an approximate 40% increase year to date. August witnessed a notable 17% decline in RIVN shares, marking a downturn after a 3-month rally. The stock did show signs of recovery in September, gaining over 7% across 5 consecutive sessions. Nonetheless, it's worth mentioning that Rivian's shares are still trading significantly below their IPO price, currently at about 69% below the IPO price of $78. Rivian faced a substantial setback on October 10, 2022 when the company issued a recall for nearly all of its 13,000 vehicles due to a steering defect. This development led to a 9% drop in the stock price. The recall was initiated to address concerns related to loosened fasteners, which could potentially lead to a loss of steering control. As of October 3, 2023, Rivian stock is slightly below an entry point of $24.62 with an official buy point set at $28.06, as indicated by MarketSmith Analysis. In terms of industry ranking, Rivian holds the 9th position within IBD's Automakers Industry Group, boasting a composite rating of 78 out of 99. Additionally, the stock has a relative strength rating of 93 and an EPS rating of 42 out of 99. It's worth noting that the current market status is labeled as a market in correction. While Rivian's deliveries are on the rise, it's essential to recognize that the company is likely to continue facing substantial losses for some time. These factors underscore the dynamic and challenging nature of the electric vehicle market and the importance of careful consideration for investors interested in Rivian stock. Talking about Rivian's IPO, Rivian made quite a splash with the debut of its all-electric R1T pickup truck in September 2021, followed by the R1S SUV in the fall of 2022. The company's IPO on November 9, 2021 was highly anticipated and exceeded expectations. It offered an increase to 153 million shares at $78 per share, surpassing the anticipated price range. However, Rivian stock has since fallen considerably below its IPO price, despite the initial hype. Despite this, the IPO was a massive success, raising $11.9 billion and giving Rivian an initial valuation of around $77 billion. Rivian stock briefly surged to $179.47 on November 16, 2021, but then experienced significant declines in the subsequent weeks and months. Rivian's decision to go public was well-timed, as it was one of the few startup electric vehicle manufacturers that had actually started producing and delivering vehicles. In contrast, its EV peer Lucid Motors saw its stock price more than double in the first 4 months after going public in July 2021 as it commenced deliveries. As of November 7, 2022, Rivian had accumulated 114,000 reservations for its R1 platform, an increase from the 98,000 recorded at the end of June. Notably, Amazon has a substantial 18% stake in Rivian and has been emphasizing the production of electric delivery vans in collaboration with the company. Amazon has already deployed approximately 1,000 Rivian electric vans for package deliveries in major U.S. cities and has placed an order for 100,000 more of these electric vans. However, Amazon is also exploring other avenues for electrifying its fleet, including a partnership with Stellantis to develop vehicles featuring Amazon software and the production of electric delivery vans by Stellantis for Amazon. Rivian now faces the challenges of an intensifying price war in the electric vehicle market, with Tesla and other major automakers significantly reducing EV prices in 2023. This competitive pricing pressure could potentially impact Rivian's profit outlook. To enhance its competitive position, Rivian has already been implementing cost-cutting measures. Additionally, the company decided to halt plans for constructing electric commercial vans in Europe in partnership with Mercedes-Benz, a decision that led to a 5% decline in Rivian's stock price. Rivian CEO RJ Scarange has stated that the company is assessing various growth opportunities and striving to achieve the best returns on its capital investments. Currently, Rivian has increased the prices of its R1T electric pickup by approximately 17% and the R1S SUV by about 20%. Citing inflationary pressures, these adjustments have raised the base prices to roughly $78,975 and $84,000 respectively, before federal tax credits. It's worth noting that new Rivian vehicles no longer qualify for the full $7,500 EV tax credits under the Inflation Reduction Act, or IRA. Instead, they meet the standards for a $3,750 tax credit, according to the Internal Revenue Service, or IRS, website. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.